what happens is that this is the box, the yellow box. We break out of the yellow box into the cone. Everybody see the little yellow cone? That's commonly called a breakout. So when it breaks out, what do I want to do? Buy it. So here's my strategy. My strategy is I want to retire. I want 10% to retire in my portfolio. My portfolio needs positions that will give me, on average, a 10% rate of return. Fair? So this happens to be the S&P 500 index. So the S&P 500 index has more risk. In other words, if we said on a scale of 1 to 10, left to right, 5 being the center, the S&P 500 has more risk to the right by 30% than center. In other words, on a scale of 1 to 10, the S&P is 7, so I'm taking more risk. Should I get more return? Yes, do this. Let me help you out. All right. That'll keep you fall asleep, too. It gets the blood supply down the neck. Yeah. So what happens is we break out and we play it. Now, where does my stop go? I get in, I get out. Stop is where the worst case scenario. It's the bottom of the box. If it actually reverses off the breakout through the bottom of the box, what happens? I violated the strategy based on how I got into the position. So here's how you do it. How do you get in? Where does your stop go? It's a violation of how you got in. No matter what you buy, no matter how you buy it, the stop is based on what? Violation of the strategy. In other words, the strategy did not work. That's where your stop goes. And people say to me, well, on fundamental analysis, how do you know? Well, if the trailing PE, price to earnings ratio, has been raising by X% per quarter, and the next quarter it doesn't rise, what did it do? It violated your strategy. What do? You tighten your stop. Because we know that eroding fundamentals will eventually do what to the stock? Force it to sell. In other words, it'll sell off. So the key is know the strategy. This is how you build it. This is just happens to be technical analysis. So I buy, there's my stop. Now what do? I go play golf. I own it, right? And I have a stop, so if I'm not there and it falls below that level, what happens to the position? It sells. Do you have to be there to make that decision? And most of you should not be. Most of you should be 2 states away without a computer or a phone. Because God knows the greatest thing to do in the exhibit hall for me to entertain myself is to watch somebody walking by with their bag. And I go, psst. Seen the market today? What? You guys are so predictable. I mean, you're like shooting fish in a barrel. It's really cool. Somebody asked me the other day, because we manage money professionally, said, what's your fee? I said, 3%. And she kept staring at me. What? Are you kidding? Do you think I am? Well, if you are, I would never pay you 3%. I said, we'll go to the next booth. They'll give it to you for less. I don't want to be the cheapest person in town. I want to be the best person in town. And so I don't charge that much, by the way. Most of you are sitting there going, he really does that. Gullible. So we break down, that violates, we get out. So get in, get out, and what's the next thing? Target. The target is the height of the box. In other words, the height of the yellow box laid up here would become my target, which would be right around in here. Okay? So as we go along, now what do I have to do? This is where the real fun of this becomes. I call it the in-between. If you have a disciplined strategy for how to get in and how to get out, and you follow that disciplined strategy, what is the thing that causes you to self-destruct? It's the in-between. That's 90% of trading, is the in-between, which is right here. Because what are you worrying about? Why are you worried? Have you ever thought about this? If I know how to get in, I know how to get out, I know where I'm going, why all of a sudden am I worried? What causes worry? Have you thought about this? I've spent 29 years studying this. What causes worry? You know what started it with me? Was my mom always making sure I had clean underwear when I left the house. Why are you worried about that? I never understood it. If you get in a car accident, I want you to have on clean underwear. If I get in a car accident, they're going to be clean. I'm telling you, think about the reality of what we're all doing. But I've spent my whole life trying to figure out, why do we worry? You know why we worry? We don't trust ourselves. We lack trust. I've been married to my wife for 17 years. Yesterday was our anniversary. 16 years. 17? 17 years. It's the same, what was it, 16? 93. So how many is that? 50. To me, it feels like only a day. And this is on video. So when she comes tonight, I can say, see, honey? It is 16 years, so it was 92. No, that's 16, yeah, 92. 16 years. And you know what's interesting to me is that from the day I married her, I have never, ever doubted our marriage. Never. You know why? Because we talked so much before we got married about trust that we have never given up that trust. And I'm sure if one of us did something stupid, it would violate the trust. When you do stupid things in trading, you have violated the trust between your ears. And you have to rebuild that. So every time you buy a stock, what was that one we had earlier? Like IndyMac, and you ride it all the way up and then ride it all the way down to bankruptcy, what does that do to your mind? You know, how many stocks have you bought that went up and went down, went up, went down? All of those are scars in your mind, and they erode the trust factor of how you trade or invest. See, that's my point, is that what happens between this cone and that box